How y'all doing? How y'all doing? It's your guy Xavier Twigs. It's time to get into it, right? Again, first of all and foremost, we thanking our sponsors, Remain a Champion, and then we got Redwood. And of course, like we talked about last time, we going into our three segments. First, we're doing a review of last week's content. We're doing a market analysis, and then we're doing a future outlook. So let's go ahead and get into it. To begin with our review of last week's content, so we have been talking about this liquidity sweep for a while now, right? On the monthly time frame, which we're looking at this three candle formation right here from November up until now. Our December candle was our long wick up candle, our second candle right here, which began to let us know that we may be potentially forming a liquidity sweep. And then right here, our January candle is going to really be what let us know whether we are or are not forming this liquidity sweep, right? So we're still waiting on that to play out. Last week we went into the 28, right? My bad, the 21,800 level, right? 897 is exactly where we stopped, and we talked about this level last week of first needing to break through the 750 level, which I'm gonna break it down for you guys so we can go ahead and really look at it and get into it, right? Excuse me. But I initially told you guys first that we need to get above this 550 level, find support, right? Whether it was a little tap, we got a little wick down here that y'all can't really see because of my supply zone, but we got this little tap right here on top of this supply zone, turning into demand zone. Boom, buyers came in, bought up this price action right into this supply zone that I told you guys about. Why did I say 750? Because that's the bottom of this level right here, right? So we're looking for an initial hit right here at the bottom of this level on the 4 hour time frame. And then we also knew that the trend line was right here. So we're like, we could still get a pull into that level. And then we're not sure if it's going to sell off from that trend line or if it's going to keep going. But I told y'all to watch if it gets into that 750 level, then also look forward to potentially, if it finds support, to go into this 860, and then possibly wick a little bit higher above that level, which we did, right? It wicked above that 860 level. And that's just because I told y'all when we get into these supply or demand zones, right? These zones, period, it's just a lot of buyers and sellers who are within these zones. So just because we're in this zone don't mean we're going to stop at that fib level. Us being inside of that zone lets us know that we can potentially get some volatile price action, and that's where that wick high came up at. But we got back to this 50% retracement level of our fib level, right? And then we get the wick up to the top of this entire supply zone for the most part. And then we started selling back off, consolidating around this 750 level for a while, right? We consolidated here on the 4 hour time frame. And then before I continue on this 4 hour time frame, I want to really show you guys and drop down to this 1 hour, right? So Twigs, why didn't it really stop? Because that doesn't make sense. You telling us that it can go anywhere into the supply zone. Again, I don't delete my trend lines ever, right? I do not delete my trend lines ever. I feel like every trend line comes back to play an important role at some point, right? What do we have here? Because we talked about this over and over, and I just said it to start off this video. We have a liquidity sweep. So our three candle formation, one, two, three, impulse to the downside, correction, consolidation, next impulse to the downside, going into our next zone down here, right? So we stop right here at this trend line on the 1 hour. It doesn't look like we did anything on the 4 hour, right? So it looks weird that we just in the supply zone, and I'm telling y'all that you shouldn't trade within the supply zone because you don't know where it's going to stop. Once you actually go down to your smaller time frames, you can understand why we have certain problems around certain price action levels, right? The reason why we had a problem around that 900 level this time, and before we can actually get to the top of that supply zone on the 4 hour, is because we have a trend line that was sitting right there at 896, 896, 897, right? And it seems kind of weird, but that trend line is what's holding us in this bearish downtrend. So seeing that it held that trend line and you got that immediate impulse with the hour candles that followed, you got a correction, consolidation. We didn't try to retest that trend line again because it showed right here is where we have sustained sellers. Every time we came up to this level around 785, we had sellers willing to sell the market back to the downside, right? And generally, I like using whole numbers. 775, right, is a level that I particularly like of selling back to the downside. The 785 to 775 level or price range is what I like to kind of use to sell back to the downside if I'm looking to really get back to like the 100s of a candle, right? Um, so yeah, we had that 1 hour touch on this time frame, and that's what began our momentum back to the downside. So after we had this impulse correction, we began to impulse back to the downside, back into this 450 level. So that's what we switch back to our 4 hour time frame, right? And let me get rid of this. So this is what we looked at overall in the 4 hour time frame of this consolidation, right? We looked at this consolidation and then we're just waiting for that 750 break. So it kept holding below, it kept holding below, right? As soon as it came back, right, this last candle at 6 o'clock a.m., our 10 o'clock candle closed down over 300 points almost, right? Back into that 450 level. And I told you guys that what you want to see is we want to get below this 490 level right here. If we can get below the 450 level, great. It shows more depression in the price, but getting below that 490 level, which is this 38.2 fib level, below this level, we can hold below this consolidation level at 38.2 on the fib structure. Then boom, you got consolidation right up under it. We can continue to get the sell off between that 450 level to the $21,000 level, right? And we got to break one, the 350 level and the 250 level first, which we broke that level, right? We broke 350 level right here. It consolidated again among these candles. And then again, this high on this candle right here, 372, and it broke back to the downside. So last week, all these trades, these trends in the market played out beautifully. Yeah, very beautifully. So both our bearish market analysis and our bullish market analysis both played out. And buyers have continued to fade, right? That's why we keep getting pressure, selling pressure back to downside. Buyers continue to fade. So we'll make these impulsive corrections back into our trend lines, and then our seller step right back in, showing us that we have a solid bearish structure setting up, and it's playing out very well on the markets, in the market right now, right? And buyers, my bad, sellers just dominated price action right here on Friday. After we got below this 350 level, they dominated price action on Friday, selling us below the $21,000 price level that we have talked about several times, right? So again, we want to get below that 300 level. It sold right off that supply zone of 300, right into that $21,000 price level, and then just wicking below it, going down to the 800s, right? The low on this candle was 874. So just before that 850 level, and we'll talk about why the 850 level, 800 level is important in just a second. But just wicking below that the 800s or into the 800s in order to get us to show that it is selling pressure going even down to that level. So it's really showing us that buyers are losing a lot of these support levels, that this bearish structure right here, which is a beautiful bearish structure where we continuously have impulses off this trend line, corrections back into the trend line, impulses off, corrections back into the trend line, and then an impulse back off of it in a beautiful structure, right? And in this last week overall, and I told you guys that typically in a week moves, we move about 650 points. So in the body of the candle itself, we move 500. But in the overall scheme of things, we move from high to low 1,000 points. So again, you being able to catch at least 300 points a week times two, you're making $600 a week, $600 a week times 12. You can do the math. You're making about $7,000, $8,000 a year in extra income if you can just solely focus on moves like this where you get 300 points a week, which is again pretty easy if you can catch some of these moves on the NQ. Now, that gives us our review of last week, what we talked about, things that we want you guys to look out for, and we're gonna go ahead and roll into our next segment. So for our market analysis. So again, we're looking at this monthly liquidity sweep, right? We want to see this monthly liquidity sweep over here play out. So let me go ahead and clone this, move this over here. This is what we want to see play out. This monthly right here, liquidity sweep. We're going to bring it down. There we go. And we want to see if this candle right here from January will sell off to the bottom of this bullish candle over here from November, right? That's one of the main things that we're watching. Right now, we're potentially making a hammer, right? A hammer is just a seller's candle that sells into a support level. And that's the key to a hammer. A hammer has to sell into a support level. If it's selling in the middle of if it's selling to the middle of just, any odd range or anything like this, this hammer right here doesn't mean anything. All right. That's why we continue to get, we got the doji because it was indecision. This doesn't mean anything right here from November the 1st, back in, what is that, 2021. That means nothing. All right. It's not at any levels. The only support that is kind of really holding is just this uptrend, this impulse right here, and that uptrend, but like not really. And that's why we have indecision in the next month because people, buyers and sellers didn't really know which way we wanted to go. And then you have seller pressure that came in, just forming this whole liquidity sweep right there. So we're trying to see whether we're going to sell off into this support level, which I told you guys where that 20,800 level comes into place. And we're roughly 200 points away from that level right now. So which is, well within the average true range. And we talked about that. The average true range is just generally how much price fluctuates within a given actual time frame for a particular symbol, right? That's what average true range is. It's symbol specific and it's time frame specific. All right. So it'll show you what that ATR is for that symbol and that time frame as you click through. And it'll change, and update as you go through. But we're only 200 points away. We typically move 650 points in a week. And then this is the monthly candle at that, right? So we can easily get 1,000 point move, 1,000 to 1,500 point move. And we're only looking for 200 to sit right here on top of this 20,800 support level before potentially seeing our next month's candle be the one that goes back to the upside, back into that 78.6 level. So you want to just really watch how much selling pressure that we get going into this next week, especially for that particular candle. And if we can get a lot of sell pressure going into that next week, we can get some more downside momentum and potentially sell off of this entire body of this bullish candle from November. Now for our weekly breakdown. So we've had a breaker structure, right? So that 250 level right here is what I'm talking about, where our breaker structure. The breakup structure is when you're in a uptrend or a downtrend. And what happens is you break the previous highest high, right? I'm not talking about the actual new high, but the previous highest high. So our previous highest high is right here at 20,530, right? So this is why we kept getting a lot of price action, which this is why we got a lot of price action, which kept trying to sit above this level. So 20,530 continuously try to sit above this level. One right here, December 16th, December 23rd, December 30th, right? We tried and then finally we had a wick above it and price action sold off right from that level. And this is the open of that candle, right? 21,530. So we sold off right from that level and we went right into the $21,000 level of that being our next support. the 250 level was our only other support level that we could have held in order to keep that kind of structure going and keep us trending to the upside, right? Because that's where we had the buyer step in for this impulsive candle from December the 2nd, but that didn't happen. Seller pressure became too great. And I had already told you guys previously that selling pressure was seemed like it was dying off and we had to be cautious because we weren't sure we can sustain that selling pressure going to the downside. Because each time we came down here, we were only getting wicks from here, the 16th and the 30th. We were only getting wick lows, and then we're buying. It's getting bought back up to the upside. So it could have been an identification of a changing trend, but yet bears came in this week showing that no, we're selling off the market. We have conviction with the reason, or we have conviction that we are trying to sell off the market, and they sustain these lows now finally down to the $21,000 level. Right now, the next thing, because we have the breaker structure finally, so now we're trying to see going to the downside whether we're going to get to 20,650 and or 20,800, my bad, 20,800 to 20,650, right? That's the range that we're pretty much looking for. But I forgot to lock this to this time frame real quick. Give me 2 seconds. I'm like, why is my thing white? So dropping down to the daily. The reason why we're looking for the 850 level is because of our 4 hour, my bad, our daily chart. So let's go back in time to the last time we were down here at these levels. Oh, it's on my 4 hour. My bad. Okay, hold on. I'll come back to that. I'll come back to that. So let me go back to the daily real quick because I do want to show you guys where I really dropped down. So on November the 11th, where are we at? There we go. So these sellers right here are going to be critical to watch because if we can get the sellers that stepped in on November 11th right here in order to step back into the market to reinforce that selling pressure that we had from last week, then you can get a move down here to this 700 level, and this is also where they close at 800 or just below that 800 level, but that's where those levels come in place, right? So 800 to 700 is where you can potentially get the close of the market if we can continue the selling pressure into next week, right? And one thing that I learned, and I got this from Jessica Lane watching a lot of her videos, but when the market makes a major move on a Friday, allow the market to finish that move going into the open on Sunday and then Monday as we begin the week. Because we don't know if it's going to continue that same momentum from Friday or if the momentum is going to reverse and go the opposite direction, right? So this was a lot of selling pressure. We lost 2.3%, 500 points. So we just want to make sure that the selling pressure that was in this candle, that is finished before you try to take a trade to the upside, right? Hoping to catch a reversal. So let's go ahead and drop down to the daily. So we are in a beautiful bearish trend, which I continue to say over and over and over again. And I'm gonna make sure that I stress this so importantly. We have, you know, we have a we have I'm losing it. Okay, my bad. We have a liquidity sweep set up right here, liquidity sweep set up right here, and a liquidity sweep. Well, not a liquidity sweep setup right here. This is the only one we don't have a liquidity sweep, but we have a bearish engulfing setup right here, right? A bearish engulfing setup is just where you have a bullish candle to the left, and then you have a full body bearish candle, not a wick, that comes back up to the top and creates the doji, but a full body bearish candle that leads you back to the upside, and it's called a bearish engulfing because it engulfs the previous bullish candle entirely, right? Showing that bears are fully in control of price action now, and that they're willing to push the price back to the downside because they don't like these highs and these levels, right? So this has been a great setup in this trend. And what I am going to talk about in the market outlook is potentially it's setting up a bear flag pattern, right? Did you pass gas? Mm, Jesus. Um, but on the daily chart, we are close to having a change of character, right? So we had a breaker structure up here, and this is what I wanted to show you guys too. So at 5:30, and this is the 550 level. I'm sorry. But on the daily is the 550 level, which is the top of this supply zone. And once we lost this level, that's why that 20 points was so critical to us on the daily time frame. But once we lost this level, we had a change of structure. My bad, we had a break of structure, right? And that is what became very significant. It led us back in that trend line. Then we finally broke that structure for real again after we had broke it 3 times already. We broke it for real this time. And then now it was finally able to sustain these prices down here. And now we're setting up a change of character. A change of character. And this is not to get them confused. A breaker structure is just the break of a trend going in a particular direction, but is not the end of that trend entirely. A change of character is showing you that it's the end of a trend, and now you're in a completely different trend as opposed to whatever the initial trend of the market was. So our initial trend was a bullish trend of the market, but now if we have this change of character, now you're in a completely separate trend, and it's fully converting over to a bearish trend, right? So we've been setting this up on the smaller time frames. Now it's beginning to hit the higher time frames. And if it starts to hit the daily, then you can potentially look for it to hit the weekly. And then that's where our monthly liquidity sweep will play out, because now you'll finally have it hit the monthly time frame, and we would sell off to the downside. So you need to see how the weekly, my bad, you need to see how the hour, the 4 hour, the daily, and the weekly time frames are adding up in order to form that monthly liquidity sweep. But that's why I wanted to point out to you guys, because I'm giving you guys the insight to look at it now. So if it does play out, not only would you have made a significant amount of profit in the meantime, but you're able to see the whole formation of how all the time frames work together. So let me show you guys on the 4 hour what I mean. Because on the 4 hour, we had a break of structure way back here, right? That was our end post. This was our last previous high before we made that next impulse to the upside. So once we broke that high right here at 22,000, right? Essentially, I mean 22,083. These are just minor cents, but I like the even dollar level for the 22,000 level. So this 22,000 right here, this is where we had a breaker structure. Now, when we got down here to the bottom of this supply zone, I'm trying to click on it so you guys can see the numbers. At 21,750, that was our change of character, right? So we broke it the first time. We had this huge impulse back into it, consolidation, impulse back into it to get back above that level, and then we sell back off, right? So back below that 750 level, it tried to hold it again, and immediately sellers came back in, selling us back below the 750 level. Again, we had these impulses back into that 750 level to try it one more time to see if we can get back above it and keep the bullish uptrend going. That couldn't happen, right? Seller said, not gonna happen. We trying to sell the market off. We trying to remain in control. So whatever y'all think y'all doing up here, we're gonna go ahead and let y'all know that we're gonna let y'all come up here into these levels, but we selling the market back off still, because all this is just consolidation. We had impulse back in that fake out anybody who thought that, getting into the market at these 750 levels would be advantageous. And then we sell you all back to the upside, back to the downside, and we taking away all your money in your account. So I think it's just kind of funny. because we have consolidated at the 38.2 level, which I talked about a couple times, and 38.2 fib level is our consolidation level. And, we consolidated here, sold off, came back up into it, consolidated a little bit, and then went back to upside into our change of character, attempting to keep this uptrend. And then we sold back all to the downside from that level. And even here, we consolidate right below it in the 300, 450 range. And then, my bad, the 400 to 450 range before selling back all to the downside for the third time, right? And we have respected this trend line right here for our downtrend coming all the way from the top, right? So from this downtrend, we respect this trend line, a major sell-off initially, back into it, sell off from that trend line again, back into it one more time, attempting to find some kind of support right above it, and then sellers came back in to sell it off right from the trend line again. And again, I told you guys from the hourly, we have respected our trend line on the hourly in this whole downtrend, right? Consolidation, well, impulse down from that trend line into this one, impulse back into this lower trend line, consolidation, impulse down into our supply zones. It consolidated between our supply zones, went right back into this trend line. Like I told you, this is the reason why we went into that 900 level just about. And then we sold off from that trend line, respecting it. And we have been going lower ever since, right? And now we get into the fun part to see what do we think the market may do next in order to make sure that we are in the correct positioning for capturing the most of these moves. So first and foremost, let me give you guys some information about before I give you my actual market outlook, because some of this information is very critical to know how to execute in the market, to understand how the market is moving and why the market is moving the way it's moving. Because once you understand the why, you can understand how you can position yourself in the correct places to take the most advantage, right? So first, and foremost, we have earnings this season, right? We are in earnings season, but it's the financial earnings, right? Financial sector is not going to affect technology as much, but we do have some key notes that I need you guys to be uh aware of, right? We're possibly going to have consolidation because we had an inauguration ceremony that we're waiting on also, but it's not this upcoming week, it's the week this next week. TSM is reporting this week, though. They are reporting on Thursday night. And then we have potential decision coming from TikTok, the TikTok ban, right? Why is that important, Twigs? So the potential decision for the TikTok ban could boost a lot of our technology companies or just influence their price action for, a couple hours to a whole day or so, just from people being kind of excited that um, certain stocks may keep or hold on to certain portions of their market share. And those stocks I'm talking about in particular are Meta, Twitter, Tesla, and then Snap. All right. So you guys want to be on that lookout for that. And that's on well, we don't know when that decision is coming out, but whenever that decision does come down, it is going to make news headlines. So just be aware of how that influences the market because it could cause some volatility in the trading. And then you have CPI numbers, Consumer Price Index. The Consumer Price Index, it just lets us know how much our prices have risen over a particular period of time, right? And you don't necessarily want to see this number fluctuate too high because again, the Fed is trying to control interest rates, bring them down so that we don't have so much inflation into our economy, right? So the CPI number is about how it's essentially telling us how well them increasing the federal funds rate is actually helping the economy. Because the less inflation that we have, the more it's actually meet their overall objective about having about 2% inflation a year. So the CPI numbers comes out on Wednesday. That's before market open around 8:15, 8:30. So you want to be aware of how the market begins to act on Wednesday. And you may get some a notice from, your platform saying that due to volatility, we may increase margin requirements. But we are looking for a retest of our trend line. So this is where we get into our real analysis. We are looking for a retest of our trend line. Did I put it on daily? Okay, yeah, I'm sorry. I was too close to it. I cannot, that's me. So we want to see a retest of our trend line. So we right here at this support level. And since we're at this support level at 21,000, I want to see us try to retest somewhere between 250 to this 300, which is the bottom of that supply zone, but 250 to that 300, and then possibly really get into this trend line. And even if it, stays below the 250 and keeps going between 21,000 and 250 until we get closer to the end of this trend line right here over here to this other side, which is right towards the end of January, but get towards the end of this trend line and then we hit, into that trend line, but we still should generally come back into the 21,300 level before we look to get our next end post, right? So we're looking to see what it does off of this support level in order to determine how price action is really going to move. And I would only be looking for a trade either off this support level at 21,000 or up here, but this will be our bearish setup right here. So if I can get a trade off this 21,000 level, that would be beautiful. And if we drop down to the 4 hour, then the levels that we have down here, dun, dun, dun. Let me try to find y'all another one. Yeah, 21,150 is another level, and you can see it right here, where we consolidate right above it, and then we get an impulse off of that level. So 150 points higher, and then I'd be looking to take it 100 to 150 points to the 21,300 level. That is our bullish outlook. So for our bearish side, we're looking to capitalize off this selling pressure, right? What we want to do though is we want to capitalize off the selling pressure from this trend line. So we can get it from the 21,300 level, 21,250 level. Then I want to catch it come back into the 21,000 price level. And then if we continue to keep trying to push lower, then we will be looking at the 21,950 level to 900 level. And then hoping that, we're talking big picture here, right? So if we really get some selling pressure after that 900 level, it's nothing between 900 and 800. All right. There is no actual support levels between 900 and 800. So let me show you guys the last time we were down here. You see our 21,350 level. It has no support. All right. So this is not something I'm making up. This 21,000 level, 21,350 level. It has no support to the 21,000 level, which is why y'all have been seeing it continuously push to that level. And then this is our push from 21,000 level straight down to 750. All right. There are no support levels in between this area right here. It's 250 point drop right here in this one candle. There are no support levels between this area. Again, I just want to show you guys. This is the 950 level. There are no support levels in between this area. Even on the bullish side, there are no support levels in between this area. It's a wick down, and that candle came right back up to the top of here. This candle right here came right from 700, it went right to 950. This candle right here, you got 130 points inside of here from the 21,000 level down to the 780 level. Let me show you guys a couple more examples here. We have no price action in between here. All right. It wick down here. This wick is to the 900 level, and that's where we found support. But down here, nothing. 900 level just about, or just below it. Nothing on this bullish candle. Lost 270 points. All right. So I just want to show you guys, like, it's no, I'm not making this up or whatever. Like, it's literally no support level down there between 900 and 750. Really 700, but you can find some support probably around the 50s, but really 700 for the most part is no support level down there. Now, on the, like I said, the grander scheme of things, at 650, we do have a support level on the 1 hour. That's what it is. I'm on the wrong time frame. So down here near 650 is our 50% retracement on the 1 hour time frame. And right here, this is our 61.8. That's where I got my 20,750 level from essentially. Right. It's 69, but 750 is probably what you'll generally run into or whatnot. Again, like I told you guys last time, I don't mind getting out of my trades a couple points early, especially if I didn't grab 100 to 150 points. If I don't grab those last 10, it's not going to kill me. All right. So this is where I got that 20,600 level from. And the level for me is actually 630, which this 50% retracement is 624. But that's the level I'll be looking to really take a trade into long term if selling pressure really got heavy next week and they kept pushing to the downside. Now you also have a level down here. I'm ignoring the 480 level, even though it is the cost consolidation level, because the bigger level of all is down here is 350 for me that I'm particularly looking at. And I'll go and minimize myself so you can see. But I'm looking down here at the 350 level because of where we got our impulses from. But also, nonetheless, we do need to watch this 480 level because that could just hold up price action to where it doesn't continue to go to the downside. So don't negate that level. It's just not the level that I would sell my trade at unless I really see price action begin to turn from that 20,480 level. Now, this is on daily though, also. So, and I'll show you guys over here. That's where that 350 level came from. So I would think that if we're really selling on the daily time frame, that we can get into that 350 level and then find some support, and that's where we'll begin to turn the trade back either to the upside or it'll just consolidate between that 350 level and then the 480 level. All right. But that's my market outlook on the bullish and the bearish side. Again, as always, you guys let me know if y'all are looking for any more particular content. I try my best to make sure that I am explaining and breaking things down to you guys, just in case for those of y'all who don't really know what some of this stuff is or don't know where to go find the tools and um, information. So that's my trade analysis breakdown. It's your guy, Xavier Twigs. We're logging off.